Top of mind on this edition of India Tonight is the merger. It's the end of an era, really, as the HDFC group now subsumes its NBFC, its non-banking financial company, that behemoth, and this has been merged into HDFC Bank. It's going to create the world's fourth largest lender in terms of market cap, just after the likes of JPMorgan and ICBC of China and Bank of America. It's going to be number 4 on that list. And more importantly, the chairman, Deepak Parekh, who has played this very crucial role in the success of HDFC, he is now going to hold no executive role in the new combined entity. So what's the legacy that he's leaving behind, and what's in store for the merged entity going ahead? Here's this report from ET Now.
Deepak Parekh built Housing Development Finance Corporation into India's most formidable home loan lender. As the curtains come down on HDFC, which merges with HDFC Bank, it marks an end of the era for the man who left a high-paying job at Chase Manhattan Park in the 70s to join his uncle to start up the first mortgage lender in the country. Deepak Parekh joined HDFC in 1978, about a year after the company was founded by his uncle H.D. Parekh. The senior Parekh started HDFC in 1977 amidst India's somber economic backdrop dominated by the pre-liberalization culture of license permatrage. This was the time when most Indians could only dream of owning a home, and EMIs or floater rates were still esoteric concepts and didn't exist in India's financial landscape. It's also an irony that ICICI, then known as Industrial Credit and Investment Corporation of India, was the first investor in helping the setting up of HDFC along with International Finance Corporation and Aga Khan. HDFC clearly had a first mover's advantage in operating as a mortgage lender in the country, especially when banks mostly didn't disperse home loans. In those times, HDFC revolutionized mortgages through some innovative financial structuring by Indian standards. That allowed the middle and working classes of the nation to feel more comfortable borrowing money from a lender to buy a home. Deepak Parekh was a key figure in the growth of HDFC through the late 70s and 80s, when the company listed its shares and raised further equity capital and financing lines from international finance institutions. Mr. Parekh succeeded H.D. Parekh as HDFC's chairman in 1993, even as the Reserve Bank of India was mulling on allowing the private sector to enter commercial banking for the first time since the nationalization of key banks in 1969. Mr. Parekh was instrumental in the founding of HDFC Bank in a partnership with UK's NatWest Markets in 1995. Mr. Parekh brought on board Aditya Puri, a dynamic city banker who headed City Malaysia in 1994, when he was roped in as the bank's first CEO. HDFC Bank went on to become India's most valuable lender in the following years, as it is set to acquire its parent, HDFC Limited.
In 1977 and was soon joined by his nephew Deepak Parekh, and they introduced the concept of home loans to millions of Indians who had earlier thought of buying a house as a dream. And that dream came true through housing loans, which came with reasonable EMIs. And that's what revolutionized the idea of the spread of housing loans in the country. And HDFC in those ways had a first mover advantage over other lenders which came into the market in the years and decades later.
It was year 2013 when Sachin Tendulkar played his last match at Mumbai's Wankhede Stadium, and 10 years after that, Deepak Parekh on 30th June 2023 is attending the last board meeting. Now both of them are important because, like Tendulkar, Deepak Parekh commands the same amount of respect for building an institution like HDFC, and not only inside the boardroom, but this is outside in the financial world as well. We'll go to one by one. If we start with today's event, of course, that board meeting is important. Tendulkar and HDFC both hit first 100 within 5 years. In 1993, it was Tendulkar who hit the first 100 after playing for more than 4 years. Similarly, in 5 years, HDFC hit first 100 crore of asset size. Now, last board meeting under the chairmanship of Deepak Parekh, and this will not only for him, but also for VC and MD, KK Mistry, who has helped in building this kind of institution. Apart from that, if you also see the timeline of events, it was in the year 1977 when HT Parekh, who is the uncle of Deepak Parekh, he started and founded this institution of HDFC, and within the next year, that is in 1978, disbursed first loan of 30,000 crore. After that, if you see the next few years, in the year of 1981, loan approval has surpassed 100 crore in that year, and after that, the journey actually took off in 1992 when Deepak Parekh was appointed as chairman of HDFC. After that, in 2003, HDFC and HDFC Bank Pact was announced, in which the sourcing of loan was done through this institution. Apart from that is 2006. Home loan approvals had surpassed 1 lakh crore for the first time in the single year. Then come to 2022, the home loan disbursements surpassed 2 lakh crore in this current fiscal year of 2022, and same year the merger was announced, that was in April 2022, and that was quite a surprising one in 2023. Now finally we have the effective merger date, although it is tentative, it is July 1, and there will also be listing of shares which is tentatively on July 13. Now I also ask you, Harsh, what happens to this combined entity? How big this merged entity will be?
Well, absolutely, Ankur. So it's a super large entity. It's becoming the 4th largest bank in the world, behind JPMorgan, Bank of America, and Industrial and Commercial Bank of China. So it goes in this order: JPMorgan, Industrial Bank of China, and Bank of America, followed by HDFC Bank. 1.72, my apologies, $172 billion in terms of market cap is what the size will be or is expected to be. Let's look at the asset size: 23 lakh crore rupees. You've got a PAT which is exceeding 60,000 crore, making it the second most profitable domestic company, after the likes of a Reliance. And then you have 8,300 branches, only second to SBI. Employees at 177,000, and you have 12 crore customers at a combined entity level. Right, around 8.5 crore customers for HDFC Bank standalone, and 2.5 odd crore customers when I add the subsidiary companies as well. Let's have a look at how the market cap has really moved from an absolute minnow down there at 1850 crore. It's now 5 lakh crore. This is HDFC Limited's market cap journey. And, the kind of returns, Ankur, that it's given is 270
Definitely.
times. So if you had invested 1 lakh rupees in 1995, it would currently be roughly 2.7 crore rupees.
That's mind-boggling.
Yeah, that's absolutely mind-boggling, right? But that's been the journey, and of course, tentatively on the 13th of July, that entity gets delisted. Truly the Tendulkar of the home lending industry.
Definitely, like all good things take time. One more analogy with Sachin Tendulkar. It was 23 years when Sachin Tendulkar hit 100 in 2012. And if you talk about HDFC, it took around 29 years for hitting that 2 lakh crore mark. So, of course, there is a lot of analogy between Tendulkar and Deepak Parekh, as well as the institution. And like both of them, they are leaving with their heads high, with handing over the future to the next lot of leadership.
It's quite a legacy. The legacy of a brand called HDFC, and now we are seeing a combined entity that is going to make it the 4th largest in that particular space in the financial world, and that's globally speaking. Let's get further perspective on the legacy that has been created. Of course, Deepak Parekh is also talking about hanging up his boots. There is going to be a lot of history associated with Deepak Parekh because he's come to become this icon within the entire business world. Tamal Bandyopadhyay is joining us to help us break this down and understand the merger a little better. He's the author and the senior journalist joining us. Tamal, great to have you on this edition of India Tonight. You know, in this elaborate entire journalistic career of yours, Tamal, tell us about the big highlights of your reportage of India's home loan industry, how HDFC came in to the point now where we are seeing the parent company getting subsumed by HDFC Bank. Of course, the stock, like my colleagues were pointing out, has had this fantastic run, a CAGR of 22%. It's quite unbelievable, but it is true.
Well, I mean, for the record, you introduced me as a journalist and an author. And yes, I started my career as an author with a book on HDFC called Bank for the Buck, which was launched by then Finance Minister, who described HDFC Bank, on HDFC Bank. And while launching the book, then Finance Minister described it as the child of economic liberalization. That's in 2012. So yes, I have been watching both the bank and the housing finance company, and I also happened to be my first home I bought getting a home loan from HDFC. So HDFC is a unique, as you rightly said, and I heard your colleagues talking about Sachin Tendulkar and how HDFC did. Yes, in October 1997, it was formed. I mean, nobody thought it was formed on the lines of the building societies in the UK and the savings and loan associations of the US. That was the kind of model before HDFC. And from then onwards, that come this way. Talking about merger, merger has been on the horizon of the investors, particularly for quite some time. But HDFC, and that's what I'm staying away from what your colleagues have discussed, and also the market cap, etc. But just to look at the merger, why it was necessary and what's the way forward, there I'm dealing with this. The investors have been waiting for it, but all along HDFC has been talking about that. What's the point? The cost of merger actually does not justify because of the regulatory regime. We have high SLR, very high CRR, and also the 40% in private sector lending. So that was the case, and the investors in the bank were unhappy. And in early this century, there was sort of arrangement between HDFC and HDFC Bank that HDFC Bank will start sourcing the loans, and it would get some fees of it. So there's one product which HDFC Bank could not get into whole hog. That's the home loan, because there's a conflict and there's a duplication of business between the two. Now, why suddenly a year back, last year, March or April, I don't remember exactly, when HDFC announced that, look, we are going to have a merger. It took the market by surprise. All along they have been waiting, but what was the sudden provocation? Now, here's the explanation. The explanation is this: now the reserve requirement is pretty low comparatively. You have SLR requirement 18%, you have CRR only 4.5%. So the advantage, the cost, which was a prohibitive for the merger, which HDFC used to think, now no more there. And there is another dimension to it, the arbitraging opportunity. Between a non-banking finance company, an NBFC or HFC, whatever you call it, and the bank has been disappearing fast, because in a scale-based regulation, Reserve Bank of India is treating banks and NBFCs, large NBFCs particularly, almost on a par. You look at the bad loan recognition, the same norm. And even liquidity norms also for large NBFCs are almost similar. So there is no advantage of HDFC holding on to its own. So the best way to have the merger.
Yeah,
now,
absolutely.
what the merger will do to this, to the bank?
Yes.
I'm not getting into the market.
That's what I was asking you, Tamal. As far as the merger is concerned, you've pointed out certain positives coming out of it. It is going to change the dynamics of India's housing loan business. From an industry perspective, what are the dynamic changes that you see coming?
Yeah, so as we speak, HDFC Bank would be the largest mortgage lender in the country, slightly larger than even State Bank of India. So that's about the mortgage per se. And your colleague spoke about the number of branches it has and the number of cities, etc. So it will go whole hog. But there are certain fundamental changes that's going to happen to the bank, and which is good for the bank. Say SLR and CRR is a cost which they will have to bear, and which is why we have seen both the bank and the non-banking financial entity, HFC, was raising liquidity for the last few months. So I think that has been largely taken care of. Now, Reserve Bank of India has given them a dispensation that for the priority sector lending, there's a 3-year time period. So it can adjust it accordingly. So which means at this point of time the cost will not be too much. But on the advantage side, what will be there? Point number one is this: HDFC now will have more. HDFC Bank will have now more secured loan. That's point number one, because mortgage is a secured loan. It's a substantial part of its retail loan, and of course a part of its overall portfolio. So that will bring down. So that's a good part of it, which will lend to the solidity and the strength, the resilience of the balance sheet. That's point number one. Point number two is this: it's corporate retail. The ratio will be adjusted now. I think it will be from 58-42. It will be about 50-50. So that's a good balancing act. Third, yet another important part is this: the maturity profile of its loan will go up, because typically, even though a home loan is of 20-year maturity, but roughly it works about 6 years. Now, about 6 trillion plus whatever the home loan it will have now, the combined, because HDFC Plus on its own, that will have about 6-year maturity, which again will stretch the length of the maturity profile of the loans of the bank. So these are all advantages to the bank. And for the structural reason,
Tamal,
I must tell
since
you,
for the benefit of time, Tamal, also I want you to highlight 2 basic points which are going to be of relevance to consumers. How is this merger going to help consumers at large in the country?
No, I don't see, as far as consumer is concerned, I don't think whether the home loan comes from HDFC or HDFC Bank, does it make any difference? It all depends on the cost of funds. So in that sense, I don't think there's any particular benefit. Yeah, I mean, you'll not get confused between the two brands. Anyway, HDFC Bank has more number of branches, but it was not able to exploit the strength of these branches. Now the consumers will probably find it easier, because HDFC earlier was sourcing as a sourcing agent. Now it's on their own books directly. But apart from that, I don't think there'll be probably a logistic advantage. But otherwise, in terms of cost of loan, etc., I don't think there's any difference it will make.
Fair
But
enough.
if you allow me just 30 seconds, one structural for the benefit of the Indian financial system, what merger does is this: say HDFC, a non-banking finance company, holding 21% stake in a commercial bank, and the bank in turn is holding 100% stake in another NBFC, which is HBL, which is in the entire financial architecture. It's a bit of odd. There's no other instance of that. I think this merger brings an end to that anomaly would not exist anymore.
Right, Tamal. This really puts in perspective exactly what the merger brings to the table, and clearly this is a legacy. HDFC as an entity has created it. It's perhaps going to egg its performance in the future as well. And Deepak Parekh himself, his own legacy, he will not have an executive position in the merged entity. And there is significance to his retirement. He has spoken about hanging up his boots, and that's a subject for another discussion. But Tamal, that's all we have time for tonight. But thanks very much for joining us on India Tonight.
Thank you.